Some of you may have heard the term fractional shares trading floating around the investing market, but are they actually useful, or is it just a marketing gimmick? Let's talk about it. Now, unlike Bursa Malaysia, the minimum share per trade you need to buy in the United States is 1 share. So if you like to invest in US tech giants like Amazon, Nvidia, Apple, then you need to be able to buy at least 1 share each time. But unfortunately for many Malaysians, let's just say we want to buy 1 share of the most popular AI stocks now, Nvidia. That can easily come up to more than 4,000 ringgit, which is easily more than 2 times the minimum wage here in Malaysia. And don't let me even begin with the expensive stocks over in the US. It's literally bonkers if you convert it to your local currency, say Malaysian ringgit for us. I mean, you can do the math, right? So this is where fractional shares trading come in. They allow us to purchase just a portion of it rather than the entire amount of a whole single share. So even if all you have is $50 and you find a stock value at $1,000 per share, you can still own 5% of the share itself. But back in the days, this wasn't even a thing. If you couldn't afford a 1 whole share, you couldn't invest. It's as brutal as that. However, fast forward in 2019, a US stockbroker named Robinhood completely overturned the investing market when they popularized fractional shares trading, and they made a super youngster-friendly investing app. And these two had a very strong combined effect that attracted millions and millions of new investors, many of whom are younger or have very limited funds to start investing. And that is also when all the brokers that you know and love today started to jump on the bandwagon to provide fractional shares trading. And for many people, besides the lack of initial capital, which is money, the fear of losing their hard-earned money also stands in the way of investing in a stock market. So this is also where fractional shares excel at this point. By lowering the psychological barrier to entry, they reduce the apparent financial risk associated with trying something new for beginner investors. If you are certain you won't be risking your rent, you are more inclined to spend your 240 ringgit on an Apple item, right? So there you go, it's the same thing. That's how fractional shares trading became a hit, because they leverage on such psychological advantage, and that made stock investing so much more accessible and relatable to the masses. But that's not all, because fractional shares is not just in making expensive stocks accessible, but it also enables investors to diversify their portfolios without needing a large sum up front. They have made it possible for even beginners of the most beginners and younger investors to build a diversified portfolio early in their investment journey, which we all know is a very important aspect of investing. They say when was the best time to invest? Yesterday. Second best is today. So are fractional shares useful? Well, yes, to an extent. Let's take a quick look at some of the giants. And while the actual top 10 can fluctuate like anything in the stock market, stocks like Berkshire Hathaway A shares, Nvidia, and Booking Holdings, which is booking.com, they all come with huge price tags. And these aren't just companies, of course, they are considered empires in the financial landscape. So owning even a fraction of a share lets you have a stake in their continued success. And it's exactly here where we as investors need to do our homework, comparing stock trading platforms not just on their fee structure, but also on the services and value they can provide us. And I know I've said this before in some way or another, but the right platform balances affordable fees with quality services, resources, and also user experience. Some of you might ask, why go for the high flyer stocks when they are so expensive? Well, when you see these kinds of big price points, it often reflects their strong market positions, innovative tech, and sturdy business models. So investing in them, even fractionally, means you are placing your stakes on some of the most influential companies in the world that is, of course, don't want to split their shares lah. Anyways, essentially, fractional shares are a new kind of entrance ticket in personal finance that allow investors to dream big no matter the size of their wallet. But as mentioned before, it's just to an extent. Because no one tells you this about fractional shares. I'm going to. Buying a portion of your preferred stock may seem like a great deal, but the devil is in the details. More specifically, the cost of fees. You see, fractional shares trading, in contrast to typical buying one whole share purchase, they tend to have higher percentage fees because we tend to buy in a smaller trade size, which may then increase the overall cost of your investment. Think about it this way, buying fractional shares might seem like a smart way to DCA or dollar cost averaging, which is a very good strategy of spreading out your investments over time to reduce your overall risk. But if every fraction comes with a high fees, say $1 or near to 5 ringgit in this case, the cost can then eat away at your total returns. Take this table as a reference. Let's say you are investing in one whole Nvidia stock at a cost of more than 4,200 ringgit with a fee of almost 5 ringgit. But when we get into the fractions, the smaller you go with your fractions, you can see that the fee percentage gets bigger and bigger. So using 0.5, half of a share, the fee of about 4.7 ringgit will be 0.22% of the trade value. And over the course of a year, that 4 ringgit 70 cents times 12 months is 56 ringgit 40 cents, which might be a little bit too high in relative to the total invested amount. And if you compound it over the long run, that may also eat into your future returns. So as we peel back the layers, it's clear that fractional shares present a number of issues even if they provide previously unheard of access to the stock market. If you look at a bigger picture, you would also need to take into account factors like higher fees and potentially taking unnecessary investment risk because of the lower entry threshold. But wait, if you guys are still interested in investing with fractional shares, then look no further. Interactive Brokers offers the best package for all your investment needs. They have fractional shares for the United States, European and also Canadian market, which no other broker offers. Super low commission structure of only 35 US cents per trade, well regulated in more than 10 different countries. Plus, it's my personal broker of choice since the beginning of my investment journey. I highly recommend them for all starters and even seasoned investors. Feel free to use my referral link down below to sign up for an account and start investing with fractional shares trading. So this brings me to my next point. When is it good to invest in fractional shares then? And is there actually a cutoff point where things would not be so advantageous for us anymore? Very simple, just remember this simple thumb rule. Keep your fees under 0.5% for every trade you make. Why 0.5%? Well, FYI, unit trusts are easily charging you a hefty fees of 3 to 4%, and robo-advisors typically charge around 0.6 to 1%. So if you can keep it under 0.5%, you are technically paying the least amount of fees for your investments, and lesser fees will always be a good thing, right? And while some platforms offer low or even no fees for fractional shares, which is really rare, it's also very important for you to read the fine print and understand exactly what you are paying for, like broker commissions, stamp duty, clearing fees, buying in fees, trading fees, regulatory fee, etc. And in some extreme cases where brokers offer zero brokerage fees, just be mindful, you could be paying a hidden fee called payment for order flow, PFOF. Not sure what's that, right? Check out this video to learn more about it. My point is, when things are free, then you are most likely the product. But don't let this dishearten you though. If you have known me and the channel for quite a while, I always remind you guys that investing is all about making informed choices. There's no best or worst choices, only informed choices. So by being aware of the fee structure and choosing platforms wisely, you can still make fractional shares work for you, just without the unwelcome surprise of high fees eating into your future returns. And for me personally, using the table over here, just using Nvidia as an example here, I would say the cutoff point would be around 0.2 shares, where the trade value would be about 180 US dollars or about 855 ringgit, and the fee percentage is about 0.55%. Because after that, if you go lower in fractions, the fee percent shoots up drastically, way over our thumb rule of fees, which is under 0.5%. So the question of the day, are fractional shares overrated or not? Well, it depends who's asking this question. You see, fractional shares are definitely evidence that the financial markets are evolving, welcoming new potential and also younger investors, and in many ways taking a turn to be more inclusive and also more accessible. But if you are going into investing with a mindset that you are going all in on fractional shares just to have a taste of success from all the top 50 or 100 US companies, then that's definitely not right, because at that point you are over diversifying and over diluting your concentration. Because as we mentioned earlier, with fractional shares spread across too many trades with smaller trade values, the overall fees you are paying will, without doubt, overshadow your investment returns. So remember to stay mindful of the cost of investing, and most importantly, do your due diligence on the fees percentage, because whether you are investing in fractions or even whole shares, there are always final printings that you can miss. And always remember, the goal is to make yourself rich, not your broker.